Ladies and gentlemen, welcome back to the channel. I have all of your stock market breaking news today. S&P 500 is trading lower versus its all-time highs that were hit in the beginning of the trading day, with a lot of your big tech names that are actually the ones selling off today. As you can see, Nvidia is down about 3.5%, Microsoft and Amazon down about 1%, Netflix down 1.5%, and Apple, which cannot catch a break, is down about 0.64% today. Now, some of this has to do with the Stargate situation. A lot of people are questioning whether the money is even there, following a question by reporters from Trump last night. And Trump said, well, I don't know if the money's there. I think the money's there. They're very rich people. So there is a little bit of doubt with the whole Stargate operation. Seth Golden on X says January affect inflows, largest month of the year for equity inflows, 401ks, etc. Corporate blackout window ends today with record gross exposure, largest gross 2-week leveraging in Goldman Sachs history, but short exposure dominates, so net exposure remains low. And you can see here, things tend to get better from this point into about the first half of February. So could the markets continue higher? I think a lot of that will come down to next week's earnings, in which we're going to have a majority of really the market cap in this market reporting, which is kind of strange here. Take a look. Monday, you have SoFi. Monday and after hours, you have Nucor, Berkeley, and some others. Tuesday, you have Boeing, GM, Lockheed Martin, Royal Caribbean, RTX, JetBlue, some others. Tuesday, Starbucks, SAP, Logitech, Stride, and others, Chubbs, F5, some other names as well. Wednesday, you have ASML, Progressive, T-Mobile, ADP, Teva, General Dynamics, and NASDAQ. Wednesday, you have Tesla, Meta, Microsoft, IBM, Lam Research. Thursday, you have UPS, MasterCard, Dow, Caterpillar, and some others. And then on Thursday, you have Apple, Intel, Visa, CN, Atlassian, Decker Brands. And then Friday, you have ExxonMobil, Chevron, and AbbVie. The names that are missing here: Amazon. I don't see Amazon, and I don't see Google. They tend to report before Apple, so a little bit strange. But Tesla is a $1 trillion company, Meta is a $1 trillion company, Microsoft's a multi-trillion dollar company, and Apple is a multi-trillion dollar company. So next week is going to be massive in really what direction this market goes in next. If earnings come in good, then we could have a clear shot towards a larger market rally. Now, after all, sentiment is still pretty damn negative. You could see CNN's Fear and Greed Index, even though markets are at new all-time highs, you're at 49, which is about as neutral as it gets, okay? Market momentum is neutral, stock price strength, extreme fear, stock price breadth is fear, put and call options, extreme greed, market volatility is neutral, safe haven demand is fear, and junk bond demand in greed. So even though markets are at all-time highs, it doesn't feel like it for a lot of stocks out there, including some of the names that are going to report this upcoming week, like Apple and Tesla. They just have really not participated at all in this rally where stocks have hit new all-time highs. It's been a lot of Nvidia and Netflix and some other larger cap names that have led the rally, and there has been a bit of a broadening out in recent weeks. Now, Trump is recommending that FEMA goes away. Basically, they just don't do enough. And Trump says that he would love to see Canada as the 51st U.S. state. Canadians will receive tax cuts and much better health care. And Trump is threatening massive tariffs and sanctions against Russia if the war continues. And Vladimir Putin says that if Trump's election was not stolen in 2020, there would be no Ukrainian war to begin with. So some very weird geopolitical drama taking place today. And Liz Ann Saunders says the conference board LEI fell by nearly 3% in 2024. That marked third consecutive annual decline, which hasn't happened since the financial crisis. So I think a lot of this has to do with inflation. Some of the Conference Board confidence is weak. I think that's really just inflation and the market dynamics that we're faced with. Treasury yields being so high that it's basically unaffordable to get a loan, to buy a house, to get a business loan. And I think that is mainly why this chart looks so bad. And only 4 days into Trump's presidency, Elon Musk and DOGE have already saved $15+ billion for taxpayers. Currently, almost $15.4 billion have been saved. And according to the government, this is an accurate count of government spending, U.S. national debt, and DOGE, which if you just Google U.S. debt tracker, you'll see that DOGE pops up. Now, saving $15.3 billion is great, but as this continues, it is going to put downside pressure on inflation. Inflation is government spending. So the less spending we do, the less inflation we will have, and that will be very bullish for stocks. Now, here on the day today, we did get the S&P Global Composite PMI that came in at 52.4 versus forecast of 55.3, so that was on the low side. S&P Global Manufacturing PMIs were expected at 49.6. They came in at 50.1, so better than expected for manufacturing. And S&P Global Services PMIs were expected at 56.6 and came in at 52.8, so weaker on the services side, a little bit better on the manufacturing side, and the headline composite PMIs came in overall weaker. This is, again, good news for inflation, or at least it should be, with services starting to slow down a bit. This should allow the Fed room to cut rates, especially if inflation reports continue to come in good in the next couple of months, which I think they will. Now, existing home sales for December came in at 4.24 million versus consensus of 1.1 million. So that was better than expected. And existing home sales month over month came in at 2.2% versus expectations of 0.3%. Now, 5-year inflation expectations came in lower than expected at 3.2%. They were expected at 3.3%. Consumer expectations came down to 69.3 versus 70.2% as was expected. Current conditions came in at 74.0 versus expectations of 77.9, so that was a miss as well. 1-year inflation expectations held steady at 3.3% versus the estimate of 3.3%. And on the headline consumer sentiment number, you came in at 71.1 versus expectations of 73.2. So across the board, some pretty good, data for the U.S. Now, next week, we will have more important economic data. Chicago Fed National Activity Index, Dallas Fed Manufacturing Index on Monday. On Tuesday, durable goods orders, S&P Case-Shiller home price month over month, CB consumer confidence, and more. On Wednesday of next week, you will get the Fed, the interest rate decision on January 29th. That is next Wednesday. Now, the Fed is not expected to do anything with Fed policy, so we're not going to get any, rate cut or anything like that. But it will be important to see how Fed Jerome Powell kind of acknowledges the recent pressure that he's gotten from Trump, where Trump has said the Fed needs to immediately lower rates. Now, that could be a positive catalyst for markets. We'll see. You will get advanced GDP growth rate numbers quarter over quarter coming out on Thursday. Pending home sales, real consumer spending, and initial jobless claims next Thursday. And then on Friday, you get core PCE price index month over month, expecting only 0.2%. So that would be a very welcomed number, especially if that comes in on the low side. That would be great news. Personal income and personal spending will also come out next Friday. Fed Bowman will speak, Chicago PMIs, and more. Now, here today, the percent of stocks trading above their 50-day moving average is roughly at about 50%. It's technically at 49.79%, so almost 50%. And I mean, that's that's pretty bad for a market that's at new all-time highs. That means only 50% of stocks are above their 50-day moving average. There is a lot more room for strength in this market, especially in small caps, in the equal weight S&P. Again, I'm not super jazzed about large cap tech. I just think there's better areas to play, lower interest rates and a stronger economy. Okay, big tech, really not my ideal area to be in right now. I don't think it's terrible, but this to me suggests there's a lot more room for small caps, for the RSP, the equal weight S&P, to really start to outperform from here. And as I have previously mentioned, the AI Investor Sentiment Survey has flip-flopped from last week. Only 25% of investors were bullish on stocks over the next 6 months. That was last week. Today, 43.4% of investors are bullish on stocks over the next 6 months. So Trump has definitely flip-flop things since actually taking the inauguration. Neutral investors dropped from 34.0% to 27.1%, and bearish investors fell from 40.6% to 29.4%. So across the board, sentiment did get better. Now, also in the news today, Zuckerberg sets Meta's AI targets for the year, expects to spend about $60 billion, $60 to $65 billion in capital expenditures on AI infrastructure. That is better than the previous guidance of about $50 billion that we had. So AI is alive and well. You can see today bond yields are largely unchanged, down marginally on the day today. Oil is up 0.1% roughly. Crypto, Bitcoin, is up 1.78% today to 106,000 per Bitcoin. And the dollar, the DXY, is down 0.5%, which as the dollar continues to fall, that's going to be very bullish for markets. As James E. Thorne says, USD has peaked, rates have peaked. Oil going to $50. Inflation spike has dissipated. Labor data will be revised lower. Historic seasonal adjustments that Wall Street took hook, line, and sinker. It says tariffs are not inflationary. Trade accordingly. The US dollar. So this is bullish for markets. And I do expect after next week's slew of earnings and economic data, we're going to come out of next week a lot more optimistic than we are right now. I think the broadening is just getting started. Now, the headline S&P is going to rally as well, but I do really like small caps and cyclicals and more value names a lot more than big tech right now. AI software, data centers, small caps, that's where you want to be, in my opinion. The AI appliers, the companies that are actually doing something with AI, that could be Tesla. That's Applied Digital, right, for data centers. That's MongoDB for software. That's Elastic for software. These are some of the names that I own that I'm very confident in for this year. But with that said, ladies and gentlemen, let me know what you think about all of this information down below in the comment section. Have a fantastic weekend, and I will see you in the next one.